Afternoon, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your midday market minute for Friday, July 25th. So right now, markets essentially have a lot of optimism, and it looks like we might close out the week on a high note, at least when it comes to trading. And that's because we've had some pretty strong earnings so far this week, and we have a good deal of optimism when it comes to trade. So when it comes to earnings, we've already had companies like Alphabet reporting beats in the quarter, as well as the major telecommunications giant Verizon, which also reported a very strong quarter. So despite some stumbles over companies like Tesla, for example, we are still seeing earnings season carry on with more companies reporting beats than we have reported misses. Let's take a look at some broad market funds right now. So SPY, the Spider S&P 500 ETF Trust, up about 1/4 percentage point right now. We did see SPY hitting some intraday record highs not too long ago. And again, we have been flirting with record high territory when it comes to the S&P 500 over the last couple of trading sessions. Also want to take a look at QQQ, the Invesco QQQ Trust. It mirrors the tech-heavy NASDAQ. It is also in the green, rising about 0.2 percentage point right now. And again, when we look at the performance, we are seeing, at least when it comes to the NASDAQ, also flirting with some of those record highs, and QQQ definitely is at a record high right now. Here's what we also see doing pretty well when it comes to some optimism when it comes to tariffs and any sort of trade deal. Now, we know that tariffs are going to impact the American consumer, which would pull back if they saw prices on the rise. But with some of these trade deals, there's optimism that perhaps consumers will not be as hard hit by some of these tariffs that are going to be implemented against countries across the world. So XLY, the Consumer Discretionary Select Sector Spider Fund, in the green, rising nearly 1% right now. Again, consumer discretionary is something that consumers want but don't necessarily need. So when we see prices rise, consumer discretionary 100% pulls back as consumers decide to spend less and less on things that they don't actually need at that time. Also want to take a quick look at crypto. We've seen a rotation away from Bitcoin into Ethereum. So I want to take a look at both IBIT and also ETH, starting first with IBIT, the iShares Bitcoin Trust. In the red, as we've seen Bitcoin prices retreating lately, IBIT right now down nearly 3%. However, that is not stopping some of the fund flows. When I look at the fund flows on the ETF screener page for IBIT, 5-day fund flows is sitting at 1.1 billion, but not to be outdone, because again, a lot of investors have been rotating into Ethereum and away from Bitcoin right now. When it comes to ETH, the iShares Ethereum Trust, it is also in the red right now, down almost 3.5% as we see Ethereum prices falling. But again, investors are still piling into Ethereum. Fund flows into Ethereum over the past 5 days, nearly 2 billion. So again, outpacing IBIT, which is huge because IBIT is a much, much larger fund compared to ETH. But be sure to like, follow, and subscribe to ETF.com as we keep you up to date on all things earnings season, tariffs, cryptocurrency, and of course, your investor portfolio.